Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. And seems like the market's at least recovering a bit from the day's lowest point. So about the 19,700 mark again, some bit of a relief on that front.
Absolutely, Vinny. Some sort of a respite coming in because markets are off the day's lowest point at this point in time. No doubt we are seeing 0.3% downtick when it comes to Nifty, but as you can see it on the screen, a steady recovery coming in for the benchmark indices. Broader markets are holding on to a tad bit of shade of green. That's only mid-cap index. You have small-cap index still in the negative territory. In fact, small-cap index is doing exactly the opposite of what the markets benchmarks are doing. It is actually drifting lower right now towards the day's lowest point. Talking about Nifty Bank continues to be under pressure in today's trading session. 0.6% downtick coming in for the Nifty Bank. You have an important note coming in from UBS on the banks, and we'll tell you the highlights on that particular note and which are the stocks that are actually reeling under pressure on back of that particular note. But talking about the list of sectoral gainers and losers in trade today, IT Index is one of the top sectoral losers along with PSU Bank. Both of them are down approximately, or rather PSU Bank is a top sectoral loser, down about 1.2%. You have IT Index that's down about 0.8% as we speak. Apart from that, you have the metals that is under pressure. But on the flip side, if you look at Realty Index, that's the one that is actually seeing a shade of green, or dark green rather, 0.8% uptick coming in for Realty Index. Auto also holding on to good gains. Along with that, FMCG Index is also in the positive territory. So that's the way how the markets are panning out at this point in time, Vinny. But what's very key to note is the fact that the advanced decline ratio is still tilted towards in the favors of the declines.
Absolutely, surely keeping an eye out on the markets and how it finally shapes up in the last couple of hours of trade. But on that note, let's get started with all those individual movers in trade, either on the back of news flows or on the technical front. And on the technicals, we're joined by Vaishali Parekh today, while from the research team, we're joined by Lisa as well as Ashesha. Very good afternoon to all three of y'all as well. And moving on with the first stock that is in focus today, we'll talk about Lupin, as they've received a tentative approval from the US FDA for calcium, magnesium as well as potassium and sodium oxybate oral solutions as well. Now this is Lupin is actually exclusive first to file and maybe will be eligible to receive a 180-day exclusive period for the product launch as well in the market as well. As of now, when you look at it, the net product sales of this, it's around $958.4 million for the year ending December 2022, and it's for the first 6 months of 2023. This drug has managed to have a product sale of around $604 million. So on the back of this, we're keeping an eye out on Lupin, trading with gains of 0.8% as of now, with this tentative approval that they've received from the US FDA.
All right, next up, let's talk about one of the first banks that UBS has spoken in its note today, and that is IndusInd Bank. And that, in fact, is trading in the positive territory, unlike the rest of the banks which on whom the note has been come out on. So at one point in time, you had IndusInd Bank that was trading higher by about 2.3% on back of UBS bullishness on this particular counter. They are saying that they've identified IndusInd Bank as well as HDFC Bank as their top picks in the banking sector. They are saying that the lenders with higher share of fixed rate loan book like IndusInd Bank and HDFC Bank are likely to see stable margins. What also UBS is saying that they see scope of re-rating only for IndusInd Bank and HDFC Bank among the other banking players, and they've added IndusInd Bank they added that IndusInd Bank is trading below the long-term valuations. Therefore, they're giving a thumbs up to IndusInd Bank in that note that they've come out with on all the banking space. So watch out for IndusInd Bank. It is in fact bucking overall market weakness in the banking space. 1.8% uptick for this one.
Let's move on and talk about Aarti Industries and Vaishali. This one, when you look at it, has been clearly in that consolidation correction phase in the last couple of years as well. 6 months, everything. Whenever you look at it, whatever time period in the last 2 years, it's just given negative returns. Aarti Industries now on the charts. What's the indication?
So hi, basically, well, at this level where market is already surging high and most of the stocks have really surged high, I would be looking at stocks which are favorable as far as the risk-reward ratio is concerned. So to start with Aarti, I think it is in a formation of higher bottom. It has already made a strong base at around 450 levels, and from there on we see the stock moving higher. So, but this is quite agreed, it's an underperformer. But according to me, it's a value buy with a stop loss of 475. I would be looking at a target of 520 to start with.
All right, moving on. Let's talk about not one but two Navaratnas and the newly entrant into that particular space. Lisa, which are the stocks?
You gave it away. So these rail PSU companies, they have received the Navaratna status from the government, and they are soaring away in trade. They are in fast lane today, and Ircon as well as RITES, they have become the 15th as well as the 16th CPSCs to have been granted this status. Now, for to achieve this status, they have to fulfill certain criteria. Some of the criteria is that they have to report a net profit of more than 5,000 crore for the last for 3 consecutive years, average annual turnover of 25,000 crore for 3 years, or annual net worth of around 15,000 crore for 3 years. Well, it's not only today. The shares of Ircon as well as RITES, they have soared away in the last 1 year. Since 2023, they have risen. Ircon has risen 128%, while RITES have also risen 40% in this year. And this is on the back of robust order book, strong earnings, as well as increase in government's allocation. So, well, on the back of the companies receiving Navaratna status from the government, these two PSU rail stocks are buzzing away in trade today.
Okay, and out of this, one of the names that Vaishali you have picked out is RITES as well. RITES too in the last 6 months also has given very strong returns as well. Still an attractive buy at the current levels is what you would suggest for RITES?
I would say so, because overall, if you go to see, the long-term trend is very much intact, and it has corrected right from 560 levels to make a base at 480. So, in assuming that, with the indicators and with higher volume, it is ready for a new takeoff round of momentum. I would say with 480 as support, this becomes a good buy, and we would be very likely retesting the previous highs, at least towards 565.
All right, moving on. That is from RITES now back to the banking space. And Ashesha, I did try and not talk about the banking names that you're going to talk about that's featured in the UBS notes. So which are they?
Well, yes, first up, let's talk about SBI. And yes, as you mentioned, it is on the back of this UBS note where they have downgraded the stock to a sell rating from their earlier buy rating. In fact, they've also cut their target price. Earlier, their target price stood at 740, and now they've cut to 530. The stock on the back of this news is declining nearly 1.5% as we speak, and it has not even recovered from those lows. This, of course, is the first big downgrade to sell that we have seen in several years on SBI. UBS says that SBI's return ratios are likely to have peaked in FY24 and could possibly decline in FY25. They say CET1 ratio, which is currently at 10.8%, leaves little cushion against regulatory tightening. The stock has outperformed Bank Nifty by about 33% since February 2020, and now they see limited scope for upside on this stock from here on. So they've downgraded the stock, they've cut their target price to 530, and on the back of this report, the stock is declining in trade, 1.5% lower in trade as we speak.
Okay, let's move on and then talk about an earnings candidate that we have, and that is Quecam Industries. When you look at the numbers of the company actually has seen a bit of a loss this time around as well, and they've reported a 58 crore loss versus last year also they reported a loss of 58 crore. So we are seeing a decline coming in Quecam Industries stock price as well. It has slumped in trade, made a recovery, and again back in the red as well. Now, when you look at it, at one point of time the stock was down as much as 2 to 3% as well, and they're reporting a loss for the 9th consecutive quarter. So clearly some bit of a pressure that is coming in on the bottom line of the company. Other than that, when you look at it in terms of the profits of the company, that have come in and seen a growth of around 13% on a year-on-year basis. Margins have seen an uptick of around 100 basis point coming in at 7.2%. But a clear pressure that we're seeing in terms of the profitability of the company, and that is what is a concern coming in from the investors as well.
All right, that's Quecam Industries, one of the first stocks that we're going to talk about that is buzzing based on earnings, given the fact that it's earnings season. But
I'm sure there's a whole list that is going to be coming out soon as well.
Absolutely, I'm sure all of us are waiting it, but Vaishali does not have to worry whether it's earnings, not earnings, because she's tracking the stocks based on technicals. So RailTel, Vaishali, how is this one looking on the charts to you? A spectacular rise that this one has seen in line with the rest of the rail PSU counters, but where do you see RailTel finally settling at in the next at least in the near term?
I think it would go definitely towards 260 to 270 levels.
Okay, 260 to 270 levels, so still more upside that we're expecting in terms of RailTel, at least for the stock. Surely 122% and still a higher side. So that's something that one is watching out for.
So that's the target, but what sort of a stop loss should one keep in mind, Vaishali, when it comes to at least RailTel on the charts?
220. 220
Sorry?
should be
220.
220 should be.
Yes.
All right, so that's the take coming from Vaishali when it comes to RailTel. But let's move on and let's talk about Angel One, because that particular counter is in focus on back of its earnings. And if you look at the earnings, it's a strong quarterly performance coming in from Angel One in the quarter gone by. Let me take you through the numbers of Angel One. They've actually, the stock is actually gaining for a fifth consecutive session. No doubt it's off the day's highest point. But the consolidated profit for the counter jumped by about 43% when you compare it on a year-on-year basis. The profit is coming at around 305 crore rupees. If you look at the total revenue from operations, saw an uptick of as much as 41% on a year-on-year basis, coming in at 1,048 crore rupees. The total client base also for Angel One has seen an uptick 48% on a year-on-year basis. The total number of orders also saw an uptick of about 47% on a year-on-year basis. So all in all, if you look at the performance in the quarter gone by, a strong set of show coming in from Angel One. The stock is up for a fifth consecutive session. Let's see if it holds on to those gains as we end the day.
Absolutely. Let's move on and then pull up the charts for Sequent Scientific. And Vaishali, when you look at this, since February, we've seen a bit of a, recovery that has come in and a very strong move in the last 6 months as well. 46% uptick. Today also, when you look at the stock, what an up move, 12% almost uptick that we're seeing in the stock. What is it that now the charts are indicating for Sequent Scientific? Is there any sort of breakout that one should be expecting?
So precisely today, exceptionally high volume, and we have seen that the stock has just been gradually consolidating. And now with today's volume and today's candle, I think if the stock sustains above 105 levels, that is the breakout level that I'm looking at. I think if it sustains above 105 and all, I would be really positive on this stock going towards 120, 130. So I think at this level also, it's worth accumulating this stock.
All right, moving on, Lisa, let's talk about HDFC AMC and what's keeping this stock in focus today.
Well, it's on the back of results. The stock price is it's up around 5%, and that is on the back of strong results. They posted a PAT growth of around 20% on year-on-year basis, and even revenue that saw an uptick of around 18%. Well, even their market share, they gained market share of around 12%. It was up nearly 90 bips on year-on-year basis, and brokerages are cheering and they gave a thumbs up to this because Morgan Stanley has maintained an equal weight on the stock. They have set a target price of around 2,375 per share. Even Nuvama has raised their target price by around 19% to 3,170 per share. HSBC also has raised their target price to around 2,580. But what HSBC has highlighted, they have cautioned that the moderation in the income yields that is expected to lead to slower earnings growth, because when a mutual fund scheme grows in size, then the market regulator, they mandate a total expense ratio, a lower total expense ratio, so that may weigh on their earnings growth going forward. But HDFC AMC, on the back of their earnings, it's up around 4% as we speak, and they have also hit a 23-month high intraday.
Okay, that is HDFC AMC that's in focus on the back of its numbers as well. Surely a positive notes also that have come in numbers, and we've seen that up move coming in for the stock. Let's move on and talk about a pharma name on the charts then, and Vaishali, Aurobindo Pharma. It's moving slowly, steadily and gaining that pace and momentum from around 550 levels 6 months back. Today trading above the 900 levels. What are the charts now indicating? What is your target that you're keeping for this?
So I would say that yes, Aurobindo Pharma, those do run up, but I still think that there is scope for higher targets. And now if I'm seeing the weekly chart, it is on its way to go towards 1050. So I would say keeping a strict stop loss of 880 levels, I would definitely look at a target of 1040. So it is yet a buy, but of course with a calculated risk.
All right, moving on, Shesha, which are the next set of banks that are there on UBS's radar and the note that they've come out on the banking space?
Yes, it is not just SBI and IndusInd Bank, but we will talk about Axis and Kotak Mahindra Bank as well. And this is yet again on the back of that report that has come in. They've downgraded Axis Bank as well to neutral from their earlier buy rating. They've cut their target price to 1100 from the earlier target price of 1150. As far as Kotak Mahindra Bank is concerned, UBS has maintained its sell stance on the stock and they've cut their target price to 1875 from their earlier target price of 2050. They say that unsecured loans are growing rapidly and this could be followed by higher defaults for both of these banks. Relatively on this sector, they continue to remain neutral. They see limited room for re-rating for the entire sector. Retail leverage has increased and they see this as a negative. So they've downgraded both of these counters, and just like other banking stocks, both of these are also under pressure today. Kotak Mahindra Bank down and Axis Bank is also declining nearly 2.5%.
Okay, that is Kotak Bank as well as Axis Bank. But the next stock that I'm going to talk about is also a bank, that is IDBI Bank. Now, this is according to ET Now and exclusive sources that are telling us that the financial bids for IDBI Bank divestment may be called in the last quarter of this fiscal year. The RBI is still conducting a fit and proper test for IDBI Bank's divestment, and the fit and proper test for IDBI's prospective bidders is also underway. RBI is likely to complete this test of fit and proper, whether it's sufficient enough for the prospective bidders, by the end of next month as well. And finally, the due diligence of the prospective bidders will start post the RBI's clearance that comes in, and interested bidders will be taken to the virtual data room. The government expects to call the financial bids during the last quarter of FY24, and obviously that's one we're keeping an eye out for. Let's not forget companies like Premmatsa, Kotak Mahindra Bank, Emirates NBD have submitted expression of interest as well, and obviously the government LIC together hold 94.71% stake in IDBI Bank and are looking to offload 60.72% stake. So keeping an eye out on IDBI Bank, as of now trading with gains of 0.3%.
That's one of the reasons, based on news flow, why you should keep IDBI Bank on your radar. But Vaishali, IDBI Bank on the charts, how is it looking to you?
No, I think it's still showing a lot of upward trajectory, and I think just the way some of the banks are really doing well. And I'm just seeing the weekly chart also. It has been consolidating right between the band of 65 to 72. So once we see a decisive move above 75, and of course it is still showing a lot of strength, I would be looking at a target of 90. So it is yet a buy.
Okay, let's move on and talk about 361 Awam. And Lisa, why is this one in focus today?
So 361 is gaining in trade on the back of a bulk deal, and Norway Central Bank, Norges Bank, has bought around 167 crore worth of 361 shares in an open market transaction. Well, they have purchased around 32,75,000 shares, and the shares were purchased at around 511 per piece. And on the other hand, Morgan Stanley Investment Fund, they offloaded around 24 lakh shares, and it was at the same price. So that is why we can see 361. It's buzzing away in trade. It's around 4.8% as we speak.
All right, so that is 361 WAM. But Vaishali, first source, how is this one looking on the charts to you? A good bet in the mid-cap IT space?
So I would say so, because we've been seeing the stocks right from yesterday. It has been surging high, and well, I think good volume. Today also we are seeing good volume. I think this stock is ready for a target of 180 to 190. So with a stop loss of 158, I think the stock looks quite promising.
All right, moving on. The next counter that need to watch out for is Anand Rathi Wealth, because that one actually came out with his earnings yesterday post market hours. And if you look at the numbers, if you look at the operational performance, at least the margins, that's the way, that's a point to worry, and that's one of the reasons why you can see the stock pretty subdued in trade today. So if you look at the revenue, it's coming higher by about 34% on a year-on-year basis at around 182 crore rupees. The PAT has seen an uptick of about 34% on a year-on-year basis. Also, if you look at the EBITDA performance, also 14% uptick on a year-on-year basis. But it's the margins where there's a contraction when you look at it on a year-on-year basis. The margins have come in at around 42.4% versus 49.7% on a year-on-year basis. So approximately 730 basis points downtick that has come in on a year-on-year basis when it comes to the EBITDA margins. But let's hear out exactly what the management of Anand Rathi had to say for the year that is yet to conclude, the second half of the year, where they say their AUM guidance and also what's their trajectory going ahead for the margins. Listen in.
Yeah, so I think the AUM is a combination of what new monies we get as well as the increase in the fund value on account of the market. So the first 6 months, the market has been very positive, which has led to the numbers being achieved earlier. And not to say that we've done exceptionally well in terms of gathering fresh funds as well. Having achieved this, obviously in the next 6 months, we expect to do more. And therefore, our revised guidance for the end of the year is now 51,000 crores.
Okay, let's move on from earnings, reported to earnings that are expected tomorrow. And Avenue Supermart, Shesha, what are the expectations that are coming in for this one?
Well, yes, it will be reporting its numbers tomorrow. It already reported its operational data a while ago. Revenues are expected to come in at 12,308 crores, which will be an uptick of 18.5% on a year-on-year basis. And remember, sales momentum this quarter was led by gradual recovery in the apparel segment. Margins, meanwhile, are expected to contract marginally. We are expecting margins to come in at 8.5% versus 9% that the company reported same time last year. And this is on account of adverse sales mix that the company experienced in the quarter gone by. Store addition, meanwhile, has picked up pace. Sequentially, 9 stores were added in the quarter gone by. And healthy performance of its e-commerce business is expected to aid performance this time. Demand trends, store opening plans, EBITDA margin trajectory will be some of the key monitorables from its results. The stock, of course, is holding up ahead of its results, 1.7% higher in trade as of now.
All right, so that is Avenue Supermarts, what to expect when they come out with their earnings tomorrow. But on that note, we slip into a break in this edition of Market Fatafat. When we come back, lots of stocks to discuss. Don't go anywhere.